Let's go to our market panel on all of this. Gary Kaltbaum here today from Kaltbaum Capital Management, where he's president, also a Fox News contributor. And we're joined by Adam Johnson, the Bullseye Brief author. And Gary, you're quick to remind me that sometimes when we're looking for lows in the market, we do see a low, but it doesn't necessarily mean it's the low. What do we see today?
Well, the worst thing that happened today is the NASDAQ and NASDAQ 100 took out the lows of about 4 weeks ago. And for me, the NASDAQ and NASDAQ 100 have always been the leading indices to follow. They are the risk areas when markets go up, and you see what you were seeing. And when you're seeing Apple down 10 today, Amazon's down like 400 points, it really tells you everything you need to know. We are in a bearish market. There's more time and price to come. The Dow will hold up better than everything else because of how the big market cap and the liquidity. But I suspect the pain is not over yet, and it's definitely forecasting slowdowns to come.
More to come. We see there, Adam, Apple's decline, which has been really something to behold here, not just today, but from the highs. We did see, to Ashley Webster's point, a little bit of buying going on, say, in a Facebook. Do you take anything away from that action in tech today?
Yeah, I sure do. As a matter of fact, Connell, I was actually one of the guys buying Facebook early this morning. Notice Google was also up. I also bought Salesforce.com, which was really the leader that's driving big data, artificial intelligence. And, you know, I hear what Gary's saying. You hate to see some of these lows taken out on the NASDAQ, but the fact is we're back to flat on the year. It's not that ugly. More than half the companies in the S&P 500 are already down 20%. So I would argue, rather than arguing about whether there is a bear market, just recognize that sort of internally it's already happening. Maybe it's already happened, and that's why I'm actually buying.
All right, so you were a buyer. That's interesting, of Facebook. Gary, before we move on, tell Adam why he's wrong, please.
I just think all these stocks have more to go. Typically in bear markets, you're going to get the leading stocks of the prior bull down anywhere from 40 to 50%, some much worse. And I just think you got to be careful. This whole thing about buying because an up day, I don't think it works. I think the whole complexion of the market has changed at this point in time. Look, I hope I'm wrong. I hope Adam is right.
Well, depending on who's wrong or right, if you're looking for opportunity. Big news today. We're quickly approaching Black Friday. Retail stocks taking a big hit. Let's take a look at these guys. The National Retail Federation says that consumers are going to spend 4.1% more than last year during the winter holidays. Could the shopping season give a much-needed boost to retail? Adam, again, all these stocks under pressure today, especially Target coming out. They had a miss. And this is kind of a rough day for those retail names. But in particular, if you're a Target, a big box name, do you think that that's a better move? Well,
you know, Target actually had pretty decent results when you think about it, right? The same-store sales were up 5.1%. Okay, that wasn't the 5.3 people thought, but guess what? It's still above 5%, and they said the fourth quarter is going to be the same. If you look at the surveys from the National Retail Federation, we're actually expecting to see about $30 to $35 more of spending per person this year. That's largely a function of tax cuts. So I think right now what we're seeing is retail stocks selling off just because there is this cloud overhanging the market. Everyone is so sure that there's going to be a recession next year, and everyone wants to get ahead and sell. I think that's really looking at it the wrong way. This economy is a lot stronger than people are giving it credit for.
Okay, well, if that's the case then, Gary, if we don't worry too much about the retailers in 2019 in particular, or for this last, of course, month of the year, a lot of these companies went out ahead of the tariffs and really loaded up on merchandise. So they're not going to get that price pressure now. They're going to get hit with it next year. Does that make you worry?
Well, I worry about excessive inventory if we don't have a good holiday. And look, I think with oil prices crashing, with interest rates back, I think the 10-year back near 3, that's going to help things over the holiday. But I am pretty darn sure everything is forecasting slowdown. Just remember, Germany, which is the engine of Europe, just announced the contracting quarter. Japan announced the contracting quarter, and their markets topped out way in advance. So for me, I'm more worried about what happens first, second quarter. And again, something I've been saying for years, that still the big overhang of massive debt and deficits, and the Republicans did nothing about them when they had a chance to hopefully save the day. They raised spending. I think that's overhanging. Corporate debt is overhanging. And I'm keeping fingers crossed that things turn out for the best, but I think the markets are speaking loud and clear.